welcome to the latest episode of KapVista Klips. Today we're here with Goose from Dashdot. How are you?
Very well, thanks, mate. How are you?
Good, good. It's warming up, so I'm liking it. I don't have to walk around with a hoodie, and uh, I like the warm weather. I'm
Yeah,
more me in the warm weather.
yeah. So do I.
Yeah,
That's why that's why I live where I live. So yeah, no, all good, all good.
perfect. I want to jump straight into it. I want to
Yep.
understand all about Dashdot and what you're doing, but let's start with you. Give us an introduction. I want to know your background, your history, why people should back you.
Well, I think there's probably like several ways to answer that. And if if you've done like 10 years of PhDs in something and that was your whole life study, and then you started a business, that's one way of doing it. But that's not our story. So I actually spent 17 years building a career in the music and events industry, and became like top 1% in my field for organizing large scale music and arts events all around the world. But got to about 30 years old, about 31 years old, and me and my partner sort of were looking at each other and we were thinking, hang on a second, what's going on here? What, are we going to end up being like 60-year-old roadies or something? Like, what's happening here? And we realized that we were basically on a dead end career that was going nowhere, and we had nothing to show for it. I was in my early 30s, and we were basically had no money, and even though that we were best in class in our field, we were going nowhere fast. And we thought, well, how are we going to get out of this? How are we going to get out of this mess? How do we build a better life for ourselves? How do we create, like financial freedom, which is what everyone wants. Everyone wants the ability to, be in control of their financial destiny. And so we, like many Australians, thought, real estate, that's the answer. So, but of course, we had no idea what we were doing. In fact, I remember speaking to my business partner at the time. I said, so how does property work? And he said, oh, it just doubles every 7 years. And I said, oh, that's it. So you just buy any property and it doubles every 7 years. And he said, yeah, that's it. I was like, okay, sounds simple enough. So armed with that very little amount of incorrect information, Gabby and I went and decided to try and invest in property. Now, we didn't have much money at the time, but we borrowed some money off family and friends, or family specifically, to get a deposit for our first property that we were convinced was going to be a winner because we'd been sold to and spruiked to by a guy in a nice shiny suit with some nice brochures and stuff. And effectively, we bought the wrong property in the wrong place at the wrong time, and we lost a bunch of money. And that was not really how that was supposed to go. That was our shot. That was our ticket out of there, and it didn't work out. Now, that was actually probably the best thing that could ever happen to us, because that really triggered a bunch of questions for us. Like, hang on a second, why didn't I thought this was supposed to go up. So why do some properties go up? Why do some properties go down? How could you find the right property? How could you build a successful portfolio? How can you create financial? It started to prompt all these questions. We started really digging into it, and we got very obsessed with trying to find answers to that. Now, over the course of the next year or so after that kind of first failure, we went deep on trying to answer these questions. And of course, in the space of a year, you don't answer all of those questions, but you can go a long way if you try really hard. And we got to early 2019, and we said, look, we're not geniuses at this yet, but we reckon we've worked out enough stuff to be able to help some people avoid making the same mistake that we made. And that was it. And at the time, we said, wouldn't it be amazing if we could help 10 people avoid the same mistake that we'd made? So when we started Dashdot, we had $5,000 to our name, no safety net, no backup. We'd never worked in the industry. We didn't have any connections. We didn't know any property investors. We didn't really know how to run a business. We'd never really done sales, or we'd never done sales. We didn't know how to market. We didn't know any of it. And we burnt the boats, and we had so little money that when we started the business, we had to choose between buying food or spending money on ads to try and grow the business. And we chose ads. And what we do instead is we'd walk around the supermarket, the local supermarket in one of the suburbs of Geelong in Victoria. We'd walk around, eat food off the shelves, and then go back to work. That was how we sort of operated for the first couple of months of building the business. And then since then, we've had a lot of ups and downs. We got some traction. We grew rapidly. We thought we were rock stars. COVID hit. We had a 97% loss of revenue, and 94% of our clients requested a refund because we had in our infinite wisdom an unconditional money back guarantee policy, which meant that people could just ask for it. So we had a 94% refund rate and 97% loss of revenue as soon as COVID hit, and that put us basically back to square one again. But it was from that very dark period of time where we were back to basically eating cans of beans again, that we really built the foundation for what the business is today. And since the end of 2020, really we've really grown quite rapidly over the last 4 years. We've grown by 2,230%, so 22.3x, 120% compound annual growth rate. We're the fastest growing and biggest company in our space. We've helped, over 1,200 people build over $180 million worth of wealth, and we've done that by really deeply innovating and developing some really world-class technology that helps people find the right property in the right place at the right time. So that's kind of the high-level overview, and we can kind of dig into any of those parts that you want to.
Yeah. Okay. So, um, tell me about Dashdot. Right. Tell me about from a let's say I'm wearing my consumer hat. I want to be your customer. Tell me about what you do, right? Because I understand that there's different parts. There's a whole
Yep.
suite of things, and it's a full service offering. But tell me about what you do.
Well, I think the first most important thing to understand, particularly from an investor perspective, is that there's two parts to the business. There's the front end, which is consumer facing, and we serve consumers in a very deep way, and I'll explain that in a second. And then there's the back end. The back end is where really all the magic happens. And so I'll talk about the front end first, but just to kind of highlight very much on the front in the very first instance, we started as a pure play service business, effectively a buyer's agency business. That has significantly evolved. That being said, we use technology and very innovative technology that we've developed ourselves over the last 5 years to transform the way that we have delivered these experiences to clients. And so, whilst our the primary way we generate revenue is client-based revenue, it is technology-driven. And in fact, in a recent client survey, around 30% of our clients said they specifically chose to work with us because of the technology. And so, whilst I'm about to talk about the kind of service side of the business, in essence, it would be a misrepresentation to think of Dashdot as a service business. It is, I would say, it's probably 75% technology, 25% service, if you sort of want to think about it like that. But from a consumer's perspective, it's great, right? Because people buy from people. People don't buy things; they buy people. And so what we've built is a highly consumer-centric brand. And all of the innovations we've done and built and created have been designed around how do we serve the needs of consumers. Now, it's a very big market, first and foremost, right? So there's 2.4 million property investors in Australia, growing by about 4% a year. The real estate market, just the residential real estate market in Australia is worth about $10 trillion. About 30% of that is owned by property investors. So you've got about $3.3 trillion worth of assets owned by 2.4 million people. And most of them have no idea what they're doing. Some have been successful, but that's been success through luck, not strategy. We can see that in the numbers because 71% of property investors never get past the first property. And in Australia, real estate is the vehicle of choice to create wealth. So in other countries, it might be the stock market or whatever. And in the US, for example, the real estate market is very different to the Australian market, etc. In Australia, real estate is it. And despite the fact that it is the largest asset class in the country. It's actually, in fact, the largest asset class in the world. And it's also the least understood. And so we have this interesting dislocation between it being the largest asset class, the thing that people care about the most, the thing that most people want to get into, and also the thing that people understand the absolute least. And so we've built a lot of what we call property portfolio intelligence to be able to analyze and understand every step of the consumer journey. And we've built technology to support that. But from a consumer's perspective, what they get access to what we call the Dashdot portfolio growth system, which in effect has 4 phases: plan, finance, acquire, and optimize. And so what we do is we take people through that entire journey, which then acts like a flywheel. So most people, when they go to invest in property, they don't have a plan. They just think, okay, I'm just going to buy and, effectively buy and hope. I'm going to buy a property and maybe it'll double every 7 years. You never know, right? Who knows what's going to happen? But we start first and foremost with planning. And the planning that we do is based on our proprietary technology, which we've also developed proprietary AI to support that, so we can build plans using AI. And that allows us to analyze a person's current situation and their future goals, and then really, in a highly sophisticated fashion, build out a plan of how many properties they need to buy, in what order, when are they going to need to sell, all of this kind of stuff based on very sophisticated data analysis to build a comprehensive plan to get them from where they are now to where they want to be. Now, of course, plans change. So as their portfolio grows, what we do is we update it, we put in the properties they buy, we update values, and so the plan is actually an organic thing which continues to evolve over the life of the consumer. But we start first and foremost with a plan. Once we've got a plan, then we know what the next step in the journey is going to look like. Then we move to financing, because real estate investing is a game of finance. So you need to be able to finance the deals. In fact, the reason that so few people are successful in real estate investing is because they get stuck by one of three constraints in their portfolio. They either lack access to capital, access to cash flow, or access to borrowing capacity. And so what we do in our planning is we go, okay, where are the constraints? How do we optimize for the constraints? And how do we make sure that people don't get stuck? Because just buying the highest growth property that you could find or whatever is actually not a path to success if you can't continue to finance and buy and continue to grow your portfolio. You will never become financially free with a single property. You typically need about 4 to 5 or more properties. It can be as low as 4, but typically it's about 5, and less than 1% of property investors get to 5 properties, right? So there's obviously a big gap. And imagine just for a minute, Daniel, imagine if you said to me, hey, I want to invest in property to become financially free. And I said, well, less than 1% of property investors actually become financially free. Would you think you would do it? No, you'd be like, well, that sounds crazy, right?
Yeah.
But that's actually the reality that most property investors are unaware that they face. So go on.
You're completely correct in saying that people don't understand property, because if you're new to investing, you have no idea about investing. You think, oh, I'll buy a house. House is safe. It's an asset, bricks and mortar. I can touch it. I can feel it. It's there. It's going to grow. Right? Don't need to know about. They think they don't need to know a lot. Right? Houses are safe when you compare it to the stock market and ETFs and managed funds and things like that, or direct equities, where people are like, oh, I've got to really understand finance to be able to invest in it. So I think properties is simple, when it's not really simple. There are so many other factors at play. It's not simple at all, right? So yes, 2.4 million property investors in Australia. It's not as easy as you as they think. People are just buying it.
Absolutely not. And in fact, real estate on its own is actually not that great of an asset class. Real estate investing is actually great because of the financial engineering you can do. Without the financial engineering, i.e. getting leverage, refinancing, moving equity around, it's not actually that great. But when you do use financial engineering, we routinely have clients getting triple-digit return on invested capital. Our average return on invested capital for our clients in the first 12 months is 67%. But we have hundreds and hundreds of clients who have achieved 100, 200, 300% return on invested capital in anywhere from 12 to 24 months. So and they're crazy returns. Like, imagine if you could, you're not going to get those returns anywhere else. That's better than Nvidia. That's better than Bitcoin. It's crazy. But you have to be able to do it intelligently, which is why financing is the second part. We need to make sure we get the finance strategy correct to be able to make sure that people can buy, continue to borrow, continue to be able to refinance and grow and scale their property portfolio. Because it actually creates a kind of infinite money glitch if you know how to optimize around those constraints. You're able to continue to grow in a way that other people aren't. So first step is plan, second step is finance, the third step is acquire. And that's where really the bulk of our energy has gone in terms of how do we develop really sophisticated real estate market intelligence. When we very first started, we started by trying to work out how do we identify the optimal time to get into emerging markets. But then we said, that's great. We worked that out and we could time the entry into markets perfectly, which was crazy. And we started massive outperformance. And then we said, okay, well, that's cool, but then everyone has unique needs. So we needed to build the portfolio planning technology. And then we said, okay, that's cool. Now we can work out how individuals need to buy in different locations. But then we said, well, how do we know where the market is going to go? When do we need to get out of markets? So then we built price and rent forecasting models. And so we've built lots of stuff to solve all these different stages. And we've got a very sophisticated buying process as well, which we're buying currently around 100 properties a month at the moment. So, we're definitely moving with a decent amount of scale there. And we recently restructured our operating processes for our property acquisition, for the kind of property acquisition part of the business. And we've decreased our operating costs by 57% and increased our productivity output by about 37%. And we think we can improve that again by about another 30% each way over the next sort of 12 to 18 months, which is pretty exciting. So we basically take the entire buying process off the hands of the clients. So for an average consumer, when they go to invest, they typically, and there's some studies that actually show this, they typically spend about 500 hours in the process of researching, trying to find the right property, blah, 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 blah. The whole process from go to whoa for an average DIY investor is about 500 hours. On average, our clients spend 5 hours engaged in the process. of buying the property, and we do all the rest of it. So it's a very kind of like we take care of the whole thing.
Yeah.
We manage that all the way through to settlement, and then post settlement we go into a phase that we call the optimization phase, where we continuously update and review and provide portfolio health checks and portfolio plan updates every 6 months. And very soon that's going to be monthly, because we're just doing a new data agreement, which we haven't inked yet, so it's coming, but we're going to be able to do this effectively as close to real time as you can get, where plans and strategies will continue to update every single month, automatically allowing consumers to stay engaged and optimized on their journey. That then also allows us to know when they should go. So that kind of feeds back into the planning stage, because we're updating the plan and the optimization, which then goes back into the financing and acquiring. So it creates effectively a flywheel that allows people to not only achieve their goals faster, but also creates a huge amount of client retention for us as a company.
Yeah, that's pretty incredible. So you've built this incredible business.
Yep.
It's a technology company with a service aspect. It's scalable. The market is huge in Australia. Tell us about your wins. What's the milestones you've achieved?
Well, I mean, there's a lot of them. I mean, we could talk about our awards. We've been in the Fast 100 list in AFR for 3 years in a row. We've been in the Deloitte Tech Fast 50 3 years in a row. We were the number 2 most innovative property company in Australia last year, sandwiched in between a couple of multi-billion-dollar companies. So, for a small little startup, it's no mean feat. We've been recognised as finalists in the PropTech Awards, Best Place to Work Awards. We've definitely been punching above our weight in terms of recognition for kind of growth, excellence, and innovation, which is pretty cool. In addition to that, as I mentioned, we've grown by 120% compound annual growth rate just in the last 4 years, which is about 22.3x. We've bought 1,565 properties, I think, so far, with an average 1-year return on invested capital for clients of 67%, and we've created $180 million of new wealth for everyday Australians. So there's success markers basically on every point of reference that we want to look at. One of the other interesting things about the company, though, is that, as I mentioned earlier, we started the company with $5,000, and that was it. $5,000, no experience, no idea, and it was probably better, because if we knew how hard it was going to be, we probably wouldn't have gotten started, right? So the thing is, as well, we've effectively bootstrapped. Now, aside from some kind of like minor debt contributions to our journey and stuff like that, we've never raised any venture capital. We've never taken any outside investors. We've got a very pristine cap table. We've had some cap table dilution, primarily from our inclusion of our team, our leadership team and stuff into that picture as well. So what we've done over the last 5 years since we started in 2019 is we've just continuously reinvested profits to support both growth and innovation. And that's been part of the flywheel that's kind of kept pushing us forward and kept causing us to break new ground.
Yeah, amazing. So tell us about the raise. How much you're raising? What's it being used for? That sort of thing.
Yeah. Well, we're looking to raise up to $5 million. And, it's kind of raising capital is one of those funny things, because we're going to keep doing what we're going to do anyway, right? So we've gotten this far through will, determination, and grit, and we're going to keep going. And so what we're looking for, though, is partners who want to join us on this journey and who are going to allow us to accelerate our growth. We've recently just unlocked the ability to 30 to 50x expand the business, and specifically through the optimization of the service process and the addition of a new technological breakthrough, which we are just rolling into production at the moment, which is going to basically, as I say, unlock 20 to 30x more scale opportunity in the company, driven primarily by efficiency and technology and scale, which is pretty awesome. So we look at the opportunity in front of us, we look at the time, we look at the world around us, and we're sort of saying, well, now's the opportunity for us to go faster. So we've kind of ironed out a lot of the kinks. A lot of people say they don't want to invest in businesses until they've done $10 million in revenue, and the reason for that is because it takes you till that $10 million of revenue to kind of work out how to iron out some of the kinks in the business. Yeah. And so we've passed that now. We did 15.6 million in revenue in the last financial year. That's on an accrual basis. We did about 17 or so million in actual sales. But so we've sort of passed that threshold, and we're now ready to go, all right, cool, like what's the next step? So we're looking to raise up to $5 million now. We are probably going to be looking to raise again a few times over the coming couple of years. Part of that is to recapitalize the business. We've been fueling our own growth along the way, but we also want to really deeply invest in marketing and growing all of our operating companies. There's a huge opportunity for us to take significant market share It's kind of we're in one of those unique situations where there genuinely is a winner takes most situation. It's a nascent, highly fragmented market that is growing rapidly, and if we can capture the vast majority of it, then we can continue to dominate. We're already the kind of dominant player in the space, but if we can expand that lead, that's gonna solidify that and create a bigger flywheel and a reinforcement wheel. So we're looking to invest in marketing and growth, accelerating our technology roadmap as well, which is pretty exciting. We also are adopting a Bitcoin corporate treasury strategy as well, and we see that as a long-term play to build what we call a collateral fortress or an invincible balance sheet. So there's an element of that, and as I say, to top up our working capital needs as well. So,
all right, amazing. So I'm not going to take up too much more of your time. I know you're a busy man. You're spinning a lot of plates, but you've got a company that you've built out of. Well, there's a demand. There is a demand for this in the market. You've built it to multi-million-dollar in revenues. You've got awards from everywhere. You've proven yourself. You're now raising because you need to pour fuel on the fire to scale, but you're going to do it anyway.
Yeah.
Right. This is a company where, you've passed that threshold, that risk threshold, where it's just now becoming bigger. I think this is an opportunity that most people can understand. That yes, property investing is the backbone of the Australian market, but most people don't understand. Like my father is a 708 on paper. He owns property. He knows nothing about investing at all. He was one of these people that was told, buy your first house, then buy your second house, buy your first house, and he got lucky along the way. He's one of those people that got lucky, but he's not an investor, right? People who want to actually invest and understand the market, they need help because there is the potential to lose money in the property market.
And I'll just add a couple of things to that as well, because there's a perception of Australian companies that if they're Australian focused, that there's not enough room to grow because Australia's a small market. And I would broadly agree with that. Yeah. The difference in our situation is that the market is so big. Like it's a huge part of Australian, psyche, culture. The equity in the whole country is based around this. And so when I look at, personally, when I look at investing opportunities, I'm not interested unless I can see a 10 to 20x plus opportunity in front of me. Because otherwise if you're 50% wrong, then it's still a 5x, right? You know what I mean? So you got to play that out in a very pragmatic sense. And this isn't just the kind of like founder hopium type attitude. In a very pragmatic sense, I genuinely can see $150 to $250 million in annual revenue in front of us without us really having to do too much differently from what we're doing today. We just have an opportunity to expand into the market and capture more of the market. That in and of itself is pretty exciting. Not to mention that as you continue to walk down these roads, you tend to find more ways to continue to expand. And so when I look at this, I go, okay, so we're at circa 15 million right now in the last financial year. Can we get to 150? Yeah. And can we do that in probably the next 5 to 10 years? Yeah, we can, right? So we've got a pretty big opportunity in front of us. When you then layer that with the technology and innovation development and our innovative treasury strategies and all of that kind of stuff, you start to end up with a value proposition which expands quite rapidly in its potential scope for returns and impact, which is what we're really driven by as well. We're also looking to go public in the next sort of 3 to 5 years as well, as a way to create investor liquidity, because we know that particularly for international investors, if they're investing in the Australian market, they're going to be going, okay, am I going to end up putting my money into some kind of like backwater service business that's going to spit out a very small amount of dividends on it? That's not our game. I'm not driving most people in real estate get into real estate because they want to make a heap of money and drive around in a Ferrari. That's not us, right? We've never done that. We've paid almost no dividends. We've reinvested all the profits. We're here to do something big and make a very large impact. We also understand that as we take on investors, we need to think about what our investors' needs are, not just our own. It's all well and good for us to grow a big company, but if investors want liquidity and investors want to actually realize their returns, we have to create those opportunities as well. And so that's why we are strategizing about, okay, now that we're at a stage where we want to go faster and we want to bring people on, how do we take into consideration the needs of those investors to make sure they can get what they need as well, which The current most likely version is it will go public. Failing that, we'd look at to do some secondary liquidations down the line as well to create that liquidity for investors. But yeah, we're definitely forward thinking in that front as well.
All right, perfect. We're going to leave it at that. Thank you very much for jumping on. Anybody who's watched this episode who wants to find out more, contact my team and we can introduce you to Goose and his team. But thank you very much. It was great to chat. I'm excited about this one.
Thanks, man.
Perfect.